Yo, what's going on, y'all? Welcome back to another brand new video. And in today's video, I'm going to be going over how I was able to make 8 risk reward, taking a total of 5 trades on gold. Let's get straight into this recap. This is a strategy I use, and you guys can just copy this strategy, practice it, backtest it, and you'll see some very good results. Trust me. Let's go over on the day here, because this was actually a few trades that I called out on stream as well, included in today's trade recap. So you guys can even watch the live stream, and you'll be able to see me taking these trades live. So let's go back in time real quick to the Tuesday 23rd. Okay, so what was he seeing on the higher time frame here? First off, on gold is, if you go to the 1 hour, I saw we have 1 hour, or sorry, 30 minute. I just noticed right here, marked a 30 minute. We have inducement here. Okay, we have inducement here for its 30-minute demand. So I was looking for this 30-minute demand to get hit during New York session. We eventually hit this 30-minute demand. And so once we hit this 30-minute demand, I was looking for longs, okay? Looking for longs. Now, the thing is, when we hit this 30-minute demand and I was looking for longs, I missed the initial entry here, okay? There was 2 entries you could have used. One is the OB entry model right here. I had this limit order here. You can cover the high or low, the low of these 2 candles, order extreme low. And you could have TP'd for the 5-minute PY that I was looking for initially. This would have been your first potential best setup, that I call it. The most ideal setup, because this is the first setup that appeared. However, unfortunately, I didn't take this trade. Okay, I missed it. And so this was your internal sweep. You could have even taken a stop runner setup here. Okay, where you cover and enter on the candle closure, right? Why is this stop runner? This pullback low made a new high. Okay, this is what your internal structure looks like here. So this pullback made a new high. Okay, I'm not going to be using ever pullbacks this tiny, right? Something this tiny is not going to be considered pullback for me. I need a bigger pullback like this. This is more prevalent structure here. I'm using this internal low, and I'm entering on the candle closure that sweeps that low, and you place your stop loss wherever you want. Ideally, you get 3 risk reward out of stop runners for the most part. So that's for my back testing data, and that's why you guys should also collect data as well. Hence why I always tell you guys all the time, back testing is so important, because you need data to validify your strategy to yourself and build confidence. Otherwise, when you ever trade live, you're going to be stuck and fumbling all over the place when you're in drawdown periods, because no matter how good strategy is, you're going to have losing streaks, just like how you have winning streaks. Okay, no strategy is near perfect. So this would have been your setup here. If you stop runner, you could have got 8 risk to reward, which is insane, right? In a span of just an hour and 30 minutes. That's, most strategies cannot make that in an hour and 30 minutes, or even a week. So that's a great trade here. In terms of structure wise, this is inducement, obviously, for this supply above. So at least you target the supply, right? You either target the inducement or target supply. Most times than not, I do target the supply, because price tends to take out inducement and mitigate a PY. Same with liquidity sweeps, right? We tend to sweep liquidity and tap into a PY. Okay, so now let's go over the trade I called out on live stream. Okay, if you guys were there, if you missed it, make sure to check under live session on my YouTube channel, and you guys can rewatch the entire thing. I think it was about like a 2-hour-ish stream. Nothing too long. You can skip through if you want to, but this is a trade I was taking on live, and this is a stop runner again. This low here is your internal liquidity sweep. Why? Because this low pullback on the right side made a new high. And so because it is a prevalent pullback, it's a big enough pullback to me, it's bearish candle, I'm using this as your low. Okay, obviously I'm not going to use this low here. If I zoom in here, obviously I'm not going to use this bearish candle low, because it already got taken out, right? So whichever low is closest to that bearish candle pullback, that's going to be the low you use. So sometimes it might be a bullish candle, but following before that bullish candle, it was a series of bearish candles. So this is the bearish candle pullback, and this is where my stop runner entry is on. Okay, I enter here on the closure right here, and my stop loss was basically at this low here. I believe it was around here, covering this PY here. So we have a PY here to cover. We even covered both of those, and we also have a PY right below here that we can also cover. So it depends on how much you want to cover. You can just cover the mitigation point, which is this right here if you want to. But essentially my target here was the next high, okay? Because we do have a PY above, so you can target that as well. But I've noticed from recent price action, my TPs have been missing at the PYs by just a few ticks, which is kind of weird. Usually doesn't happen. Usually we'll go straight to the PY mitigation and then get a reversal from. But for some reason recently, I've noticed this, and so that's why I slightly adjusted my TP. It's not going to harm my P&L over the long run really by too much, but a small adjustment here, targeting the next high. And you know, this unfortunately, what happened is I moved my stop loss on stream to this low when price was already making its move. So when price was going to my favor. I was right in the trade here, and I believe roughly around here. Yeah, once we have made this first break is when I was thinking about moving my stop loss, I believe trailing to that low there. Because ideally we don't violate lows twice. Ideally we don't do this. There's times, like I said, I even said on stream, we do this, but it's pretty rare. And this pretty rare situation did actually occur this time, which if you had the original stop loss, it would have actually held and you would have been fine. But I took a 0.5 hour loss here, small half hour risk, nothing too crazy here, just because I moved my stop loss there, and eventually it did go towards TP, as you can see, and even mitigated the PY finally within the 5 minutes. So that's a 1 minute refine supply zone within that 5 minute right there. Because look, this is the 1 minute PY right here. So if I want to hold control on my keyboard, I can make it more precise, but this is the 1 minute supply. I would mark that structure point along with it. This whole thing is the 5 minutes. So if we go to the 5 minute real quick, you can see this is the 5 minute candle. We have 3 candle formation, 1, 2, 3. We have a fair value gap, and the PY is the first candle in that series. I don't use fair value gaps myself, okay? I know some people do, but for me, they're not as accurate as a PY, how I teach you all to market. So make sure to use the proper way of marking the PYs because they're extremely effective and extremely precise. Now, let's move on, and we'll go over the next trade I took, okay, which is a 4 risk reward. So now that notice we hit this PY, but keep in mind, my draw is higher at this point. Because we hit this 30 minute, sorry, I keep going to the 1 hour. We hit this 30 minute supply, or this 30 minute demand here, took out inducement, and we are bullish. Like if you look at structure wise here, we are clearly bullish. I'm expecting a new leg up. And because I'm expecting a new leg up, what I'm doing here is essentially taking longs further, continuing the trend on the right. Whenever the trend on the right side of your screen, this trend here, is in alignment with the higher time frame trend on the left, that's a very high probability price action and conditions to trade. Like the left trend is clearly bullish, right, externally, and so is the trend on the right. Now, when the trend is not in alignment, like for example here, where it is going bearish on the right side, okay, at the time, right, and the overall trend is bullish, this is when it's not as good. You can still trade this, of course, this right trend here. It's just not as ideal as trading when we have pro trend pro, as in the left trend is pro, the right trend, new trend is also pro. So that makes it double confluence to continue even higher. And so you want to be trading with the trend. Too many of you guys are counter trending in the trend that's currently going on, and that's why you are losing a lot. You're basically confusing yourself with internal and external trend, and you need to fix that. Otherwise, you will get really confused in charts and withdrawal liquidity. But again, part of this does come from experience and screen time that you just have to develop through backtesting. It doesn't require too much. You can mechanicalize this system. So let's move on to the next trade I took, which was the stop hunter. Slow, made this new high. It's the same, guys, the same pattern I tell you guys all the time with stop hunter. This is the pattern you're looking for, okay? I'm just taking that, and basically I waited, boom. As soon as you set that internal low, entered candle closure, I did, not gonna lie, I had a bigger stop loss here. I did cover this PY here because we got pretty close to it on the entry, so I did cover it. You could have also used my typical entry stop loss size I would use, but this is 11 risk reward, and I know for the most part stop hunters I can get a 3 risk reward out of them. So for my back testing, I did give it more wiggle room for this trade here, and so there we go, and it hit TP. So that's my 4R there, right? Again, I could have obviously targeted much further towards even that week high, but keep in mind the time. This is later in the session. Gold does tend to die around 2 p.m. So like keeping that in mind, I just want to take my 4R and get out of the markets. But we did have insane volatility that later came through. Not always will happen, but this is a game of probabilities, and we did get that today, or on this day. So now we play price out. This is when I believe I hopped off stream, okay? Hopped off around here, price is consolidating. I said there's basically no other entries I see at the moment. But later I took a stop hunter off stream myself. There's a lot of stop hunters today. Whenever the right trend is on the side of the left trend, you're gonna see a lot of internal structure like this, creating new internal structure, and you can use this internal structure with stop hunter because stop hunter works extremely well when it's pro and pro. So what I noticed here was a stop hunter. I took a loss L here, okay, full L loss. I could have took a, actually no, I don't think I could have taken a break even here. Unless I wanted to break even at 1-to-1, I think it might have gone 1-to-1. Yeah, if I went break even 1-to-1, I could have broke even, but I did not go break even. I was basically stop loss wise covering this PY here. This low made this new high, even broke this high as well. So I was taking stop hunter. Now, since it did break this high here, it is lower probability now with the stop hunter. Because what I did notice also on the 30 seconds, there's a PY here on the 30 seconds. Some of you guys don't have access to the 30 seconds chart. So if you don't have access to that, you won't be able to see this, unfortunately. I don't think there's a free way to see seconds, honestly. There might be something on MetaTrader, but I don't use that anymore. So yeah, anyway, point is there's 30-second PY. We did hit that, so that's why supply went down. However, I was still looking to long here. The reason why is because, like I said, I'm not trying to counter trend the higher time frame. The higher time frame, we hit 30-minute demand, okay? Higher time frame, this is our structure, external structure. We're looking to go to the upside, so I'm just following the trend on the right. Again, sometimes you will mistime it like this and get stopped out, but it's okay because I trade high risk reward with my strategy, and so I know that even if I mistime my trades, it's okay because my winners, I still have a solid win rate, and my winners are much bigger, 4 to 5 to 6 to 7 times bigger than my losers, okay? On average, my risk reward is about 3 to 4, but I can easily catch these massive winners if I just hold my TP all the way. So essentially on this trade here, this was a PY I found on the 30 seconds. Structure wise, this is inducement. Why is this inducement? This pullback made a new high, and there's no mitigation here PY wise except for this PY, but this is an invalid PY. It's in premium of this range. Okay, it is in premium of that range, so it's invalid PY. The only valid PY, you look down here in discount, and all I saw here was on the 30 seconds, there was a PY right here. So I can use hold control real quick to make it more precise. That's my 30-minute demand. There's nothing else here, as you can see. This is fully mitigated. Please don't extend your PYs all the way. Once it gets hit, it's done. It is done deal unless you get an internal sweep. That's a different story where you can take another entry. But usually that's when price is pretty close to itself again and does a little sweep. And you can still look for entry. Otherwise, it's done. So the only unmitigated PY, that means not touched by the way, is this 30 minutes. So basically in this 30 seconds, or sorry, I keep saying 30 minutes, 30 seconds, I get confused. 30 seconds. And so I was looking for an entry model here. Again, you can use whatever time frame, but I was on the 30 seconds already at the time when I marked this. And I noticed we had an IFVG entry model. Bullish candle, new low. This is extreme IFVG in this leg of structure internally. So I entered on this IFVG here. And let's go back on the 1 minute. Stop loss at the low. Again, if I use this aggressive stop loss, I could have honestly made a lot more around here. Could have made double the risk reward, but this is the seconds. I don't use seconds too often in my own trading unless it's in a situation like this where I see a small range and I'm looking for other reasons why price is reacting. Like for example, I was confused why price dumped here. It didn't make sense to me. And then until I went to the seconds and I realized, there's a 30-second unmitigated supply. That's why we dumped. But we're only dumping to take out this inducement and go back to 50% of this range. That's what I knew at the time. And so I was basically waiting for another entry model and boom. This is the forest ward. And I targeted the next high, like I said, I could have targeted also the PY, but at this time, I've taken so many like break-even trades recently, the past like I'd say 1 or 2 weeks, that I was just like, all right, I'm just gonna target the next high instead. And it worked out perfectly here, as you can see. We got forest ward, and that was basically it with the trading session. I did take some other trades after, okay, that I'll cover in a separate video. I don't want to make this video too long, but hope you guys do enjoy today's video. If you guys did, make sure to leave a like, comment, subscribe. If you want to learn how I trade and learn the exact entry models that I use, click the link down below, essentialtradersuniversity.com. Includes my course, mentorship, indicators, all of that you need. So again, hope to see you guys in the next video. Peace.